Hello everyone, welcome back to my channel US Tax Concepts by Paul. In today's video, we are going to talk about guaranteed payments, the basic definition of it and its implication on partnership and on the individual partners. But before going into the video, I want to thank each and every one of you for the love and support you have shown to my first 3 videos. If you like my content, please do like the video, share it with your friends and colleagues, and do remember to subscribe to my channel. With that being said, let's jump right into the topic. So, for first of all, what is guaranteed payments? So, guaranteed payments refer to a type of payment made by a partnership to its partner for specific services or for the use of capital. In a partnership, partners typically share in the profit or losses of business based on their ownership percentage, as defined in the partnership agreement. However, sometimes certain partners may also provide services or use their capital in the partnership business, and they may be entitled to receive compensation for these contributions. In a layman language, guaranteed payments, it is generally a payment which is made to the GP partner or the general partner for bringing in his technical know-how into the partnership and undertaking day-to-day course of business activities in the partnership, or basically running the partnership. So, moving on, guaranteed payments are a way to ensure that partner who provides services or capital receive a fixed amount of compensation before the profits are divided among all partners. These payments are made regardless of whether the partnership makes a profit or incurs a loss. So basically, guaranteed payments are generally priority payments or priority distributions which requires to be made irrespective of the fact whether the partnership is making a profit or a loss. So basically, this payment would be made to a GP partner or the general partner for undertaking day-to-day course of business activities in the partnership, or to any other partner who is entitled to it for contributing any capital into the partnership. It will be made as a priority distribution. So before any profit or loss is distributed among the partners, this guaranteed payment would be distributed to that GP partner or to the any other partner who is entitled to it. Moving on. So next slide is key points about guaranteed payments. So first point is fixed amount. The amount of guaranteed payment is predetermined and specified in the partnership agreement. It is typically agreed upon based on the services provided or the capital contributed by the partner. So this amount of guaranteed payment which is required to be paid to the GP partner or to any other partner is already predetermined, and it is already mentioned in the partnership agreement, and it is distributed as per it only. Moving on to the second point, deductible expense. For tax purposes, guaranteed payments are treated as an ordinary business expense and are deductible by the partnership. They are reported as an expense on the partnership's tax return and are subtracted from the partnership's taxable. So for the partnership, this guaranteed payment is an ordinary expense and it is mentioned in the partnership's tax return as an expense, and it is deducted from the partnership's taxable income. The third point is no impact on profit sharing. Guaranteed payments are separate from the partnership's profit or losses and are made before any profit distribution is calculated. They do not affect the allocation of partnership's net income among the partners based on their ownership percentages. So as I already mentioned that this is a priority distribution which requires to be made irrespective whether the firm is making profit or loss. So this guaranteed payment distribution do not impact the profit sharing. It is done before the profit sharing is done to the partners. Moving to the next point, taxation for partners. For the partner receiving the guaranteed payment, it is considered taxable income and they need to report it on their individual tax return. On the other hand, for the partnership making the payment, it is tax deductible, which reduces the overall taxable income of the partnership. So as this point is pretty self-explanatory, partnership do not pay taxes at its own level. They are generally pass-through entity or flow-through entity. So basically partnership flows through all the income and expenses to its individual partners. So the guaranteed payment for the individual partner would be a taxable income and they need to report it on the individual tax return. But for the partnership, it will be a tax deductible expense which will reduce its taxable income for the partnership. Lastly, it is essential for the partners to have a clear and well-defined partnership agreement that outlines the terms of any guaranteed payments to avoid misunderstanding or conflicts in the future. As with any financial or legal matter, it is recommended to consult with a qualified accountant or attorney to ensure compliance with relevant tax laws and regulations. With this, we come to the end of the topic. Thank you guys for joining in and watching the video till the end. Do like the video if you like my content. Share it with your friends and colleagues. Show maximum support to my channel and do subscribe to my channel. Guys, please do subscribe to my channel. This will be very helpful in motivating me to create such more such contents in future. The next video will be on management fee on this channel, which will be coming up very shortly within a week's time. Till then, we'll see you again. Thank you and take care.